welcome to Full House, an NHT podcast that gives you tips, information, and advice on how to make your dreams and aspirations of home ownership a reality. My name is Tamika Hill, Corporate Communications and Public Affairs Manager here at the NHT. Buying a home can often be seen as an overwhelming experience, especially in a highly competitive market. But one of the key steps in achieving this goal is through preparation and planning. On this, our first episode, we'll be speaking with Gillian Jackson, a financial blogger who will be offering us advice and tips on how to best prepare ourselves financially in the achievement of this important goal, home ownership. Hi, Gillian. Welcome to the podcast.
Hi, Tamika. Thanks for having me, and thanks to everyone for joining us today.
Thank you. First things first, other than ensuring you are contributing to the NHT, what is the most important thing to consider before purchasing a home?
Well, doing a check of your financial health, I think, is the most important thing. And that entails a number of different things. Assessing your budget first and foremost, really looking at what you're spending and what your income is, and looking at what you can afford to take on in debt, particularly home ownership. And then you also have to do a check of whether or not you're emotionally ready. Buying a home is a big decision, and understanding the nuances of home ownership, what it entails, what you'll be responsible for, what are your rules and rights as a homeowner. Those are things that you have to think about as well. And then, are you financially prepared? Do you actually have the space in your income to be able to pay for the things that come with home ownership, like the maintenance costs, the insurance, etc. Thinking about those things from very early is one of the most important things in the home ownership journey.
So you've mentioned the financial planning, you've mentioned the budget. So my next question to you is, how much would you say is a good amount to save for your down payment?
So you have to take it a step back. First of all, you have to look at what you are interested in. Look at the market, do a quick check of homes in the areas that you're interested in. What are they costing? So you start from there. Just you can scan the newspaper, look on the realtor websites, look at what homes are costing, or go on NHT sites and look at what they have available.
Definitely.
And then when you do that, you have to work backwards. Say, okay, well, if I wanted a home for $8 million, for example, or $18 million, what would that translate to in monthly payments? And the NHT has calculators. I have a blog that has calculators as well, that you can figure out what your monthly payment would be roughly when you use your NHT benefit, or if you go to the market, figure out what that monthly payment would be. And then once you do that, then that will give you an idea of what you can afford monthly, as well as what you would need to pay down to be able to manage that monthly payment. So if it's $18 million, typically buyers would want 10 up to 20%. Some will go as low as 5%. So when you calculate 10% of that, that would be $1.8 million. You would have to have that in your savings. I would recommend having another $1.8 million in your savings as well, to account for the closing costs, incidentals, and all of the fees that you'll have to pay to get the mortgage when you get to that point.
I know a lot of persons will be asking, how on earth would I be able to save $1.8 million? What would you recommend as some of the tips in saving?
So you may not have to save the whole 1.8. I know that there are programs that will offer financing for some of the down payments. Different grants are available. I know NHT has some. But if you do have to save the full 1.8, as I mentioned before, budgeting is the start to any journey in saving. So looking at really tracking what you're spending. I have calculators on my site, as I mentioned, that you can use for both budgeting as well as tracking your expenses. So really taking a forensic audit per se of your finances and looking at how much it is you're getting. If I'm getting $100,000, how much am I spending every month? And track what your expenses are. And then once you do that, you'll see how much you actually have in terms of breathing space to be able to put into a savings account each month. And then there are different savings and investment options, of course, that you can use to get to your goal faster. So I would recommend, if you're going the investment route, to speak to a licensed financial advisor, and they can help you to get to your investment goal. They'll do an assessment of what you want to do, whether or not it's in the short term or the long term. But buying a house, I would always say you have to think long term. It's not something that you can get up and do tomorrow. You have to really plan it out. I would say even 5 years in advance, thinking about that from now, putting that savings plan in place. You can get there if you have the discipline, if you do your budget, if you stick to your budget, and you can get advice from a licensed financial advisor if you're doing investments, how to get there faster through the investment route.
Okay. You had mentioned about the legal aspect. Would you say it's necessary for persons interested in buying a home to have a lawyer on hand?
I would say 100% yes. I mean, there are a few people who get away without having a lawyer, but to protect not only the interest of the buyer, but the interest of the seller as well, both of them should have a lawyer to ensure that they are covered on both sides of the transaction. So if you're buying a house, you have more to risk because you're the one that's putting up your money in a down payment, etc. So in order to ensure that your money is actually put towards what you intend for it to go towards, which is the down payment of the house, I would say route that money through a lawyer. And the lawyer will be able to assist you with things like checking if the title of the property that you're trying to buy is actually registered to the owner who is selling it to you.
Oh.
So they will be able to do things like title checks and search to ensure that the property is in keeping with what you think it is. If it's 3 acres and you think you're buying 5 acres, they will be able to check things like that. So they do some due diligence for you that you probably will not be as familiar with, understanding how to do.
Okay. And does that happen a lot, where they're buying a house or they're purchasing land and the person's perhaps give them the wrong information?
I don't know if it's a lot, but it happens, and you don't want to be a victim of that kind of transaction. So just to ensure that you are the one, you're buying a property that you have seen, it's there, and you're getting the right details about the property, I would say let the lawyer check it out for you.
And one final thing that you believe all persons preparing for a home must do?
Well, can I say a few final things?
Sure.
One is your credit score. So a lot of persons, they're not really familiar with credit scoring in Jamaica. It's I won't say new, it's 10 years old. 2023 makes 10 years since the Credit Reporting Act has been passed in Jamaica. And people don't know what their credit score is until it's too late at times. And when I say too late, it's when you're in the mortgage, or applying for the mortgage, you're going through the process, and then something untoward is on your credit report that you did not even know about. So for example, you had a loan, you closed it off, but it's still being reported, possibly being reported as delinquent by the credit bureau, and that will have a negative impact on you when you're ready to get your mortgage. So I would suggest to persons to get your free credit report. Jamaica has 3 credit bureaus: Credit Info, CRIF, and Credit Information Services.
You say that again because you went very quickly with that.
Sorry, there's Credit Info, CRIF, CRIF, and Credit Information Services Jamaica. So you can go on their websites and find out information on how to get your free credit report. It's free once per calendar year, and that will help you to understand what it is that the bank is going to see, or the building society or NHT is going to see when they pull up your credit to assess whether or not you can actually afford the loan that you're coming to them to get. The credit score is important. Another thing, I mentioned this earlier about the amount of debt that you have in your budget. So if you're getting a mortgage and you already have a lot of debt, say you have 2 car loans, an unsecured loan, your student loan, and you already have a lot of debt, that may impact you negatively. So I would say, as much as possible, you can either consolidate your debts or refinance your high interest rate debts, like your credit card, that's a high interest rate debt. Refinance that so that you have more capacity in your budget or in your income to repay this new debt that you're going to take on, which is your mortgage. So look at your debt, speak to a loans officer at the bank, figure out how you can consolidate some of those. Don't take on any new debt right before you're about to get a mortgage that may impact you negatively. So we want you have something called the debt service ratio. You don't want that to be more than 50% of your income. So all of your debts should not total more than 50% of your income. So keep that in mind when you're looking at your budget and your finances.
Okay. And there's one thing, Gillian, that I want our contributors to know, and that is that at the NHT, if you're buying a scheme unit, you don't have to quite consider a down payment. You just ensure you have enough points and you send your application in. So no down payment for NHT scheme units.
Great.
Thank you so much, Gillian, for coming in and shedding light on so many contributors' concerns. And where exactly can they find your blog if they want to find out additional information?
Sure. If you want to get additional access to my mortgage calculator or the budget templates, you can go on financialsensibility.com. And that sensibility is with a C. So it's financial, CENTSIBILTY.com. Financialsensibility.com.
Okay. Thanks, Gillian, for coming.
And thank you for having me.
You're welcome.
All the best contributors.
And thank you for joining us. Ensure you check out our next episode where we share with you one of our customers' journey to home ownership. It will definitely be a full house.